All right, hello, ladies and gentlemen. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. Yes, the 20th of February 2026. Look, I wanted to quickly do a little Forex update basically on what's happening right now on Friday. I'm doing this one before the US opening bell and also before the PCEs that are coming out later in a few kind of moments actually, or actually a few moments, so about like less than an hour. There we go, less than an hour. Look, before we go any further, as always, we need to quickly have a read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. We are getting some important U.S. economic data, especially which is very important for the Federal Reserve, as we know. However, it somehow seems that everything is getting overshadowed by geopolitics right now. Look, also, before we go any further, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's take a look at DXY. So this is the dollar index, and this morning in my Markets Talk webinar, my live webinar, I was talking about this. By the way, you can always join my live sessions, the Markets Talk sessions. Just find them on our YouTube page. They're always Monday, Wednesday, and Friday. So yeah, but look, coming back to the DXY situation now. From the technical perspective, it is at a very interesting spot right now. It's near that 98 level. And looking at this formation, of course, it looks like a nice ascending triangle pattern, which, according to all the TA rules, tends to break to the upside. Now, in a way, I'm kind of leaning in towards the idea of seeing a bit of a pop here in DXY in the US dollar index, although I'm not a very strong believer right now that DXY is the index to be in. Basically, the U.S. dollar right now is trying to regain some of its lost grounds, but still overall it's on the weaker side. And again, I've mentioned this before that currently the U.S. administration doesn't really need a strong dollar. If you're trying to attract a lot of business into the country, and you want to open factory, you want to see other countries, other companies opening factories in the U.S., then well, you don't really need a strong dollar, right? Now, are they going to succeed in doing this? I don't know. Is inflation going to eventually creep up because of all the tariffs that happened last year? And are we going to have now these effects of tariffs? Because normally it takes a year for people to kind of realize that there is a problem, and maybe, like I said, retailers could potentially start passing on the costs that they have accumulated, and from all these tariffs on to the consumer. And this way, we could see, inflation kind of moving a little bit more to the upside. And if that's the case, then the rate cuts are off the table. We could potentially be considering hikes, and well, this is where the U.S. dollar could strengthen a little bit. However, we understand that the U.S. politics right now is mostly focused on getting the rates lower. So if they succeed in having that, then yeah, we could see DXY actually drifting back down. So that's why if we look at the Federal Watch tool here, Fed Watch tool, and we can see that, for example, that in June we are kind of expecting a cut, and then July time as well. We're expecting to see, actually, we're expecting to see there's a higher probability for July to get that first cut. June, yes, but I think that July could be that other option. Look, going further in September, we're expecting another cut, and if we look at by the end of this year, we're kind of only expecting two cuts, by the end of this year at the moment. Anything can change, right? I mean, we try not to project too much. Anyway, if that's the case, if we're going to stick to that, then I don't believe that DXY go further up and up, right? Because if we look at the monthly chart here, just purely from the technical perspective, you can see that we were stuck in a range in this little consolidation area. And if it is a range, then we look at the prevailing trend. The prevailing trend is to the downside, then the greater chance for this one to break out is lower. And that kind of goes hand in hand also with the idea of seeing some rate cuts too. That's enough for DXY to go lower a little bit, and also it kind of, like I said, goes in line with the idea of attracting business and into the U.S. and for that you need a lower DXY, lower dollar. Um, Anyway, long story short, for now, from the very short term perspective, there is a chance for a pop higher here, especially if we do get the PCE in general going further in the CPIs a little bit on the higher side. If that's the case, because at the moment, for example, what's the expectation? The core PCE index year on year 2.9 expectation, basically a little bit higher than the previous. That's the current forecast. Let's see what's going to happen. If we hit 3 or maybe a little bit above, then yes, that could send DXY higher, and certainly could this this technical idea, could play out nicely. So for now, that's what I'm saying. That's why I'm leaning a little bit towards the upside. Maybe not much here. Maybe towards the 200-day EMA initially, and then we'll just take it from there. And this leads me to very quickly to some other pairs I wanted to pick up on. AUD USD. So here, look, we are at a very interesting spot, and in a way, we're seeing a little bit of a decline after hitting the 0.71 kind of 47 territory in kind of the first half of February. Now we're seeing a retracement, but what's interesting here, if I look at my purely from the technical side on the Bollinger Bands, we're holding still above the 20-day SMA within the Bollinger Band. So in a way, that's kind of could be seen as a positive. And this little correction lower, it could be seen as a correction lower, just a correction lower. And that's why I have my little obstacle here, the 0.7010 roughly. If we do fall below that, yep, I'm going to consider a move further south. However, at this point, I'm still cautiously bullish on this one. Look, if DXY does push a little bit higher, we'll see how far this can fall. Maybe it could fall a little bit here. Maybe it could give us that little, spike here to the downside, or actually a big spike to the downside, and then maybe it will stabilize and reverse back up. AUD JPY, just very quickly, our risk on risk off monitor. Look, I like this level where it's currently sitting at, this 109.37, because I talked about this level before. This is the highest point of 2024, ladies and gentlemen. So we're currently testing that. Look at the monthly chart here. I mean, we have been rallying, and this is our risk on risk off monitor, right? So basically, we can sometimes determine the stock market activity, and we can actually, this is kind of a reflection of the stock market. So overall, it's still bullish. Nobody's jumping into the yen yet. Nobody's abandoning Australian dollar yet, because I think that still the commodities are a hot topic, and if commodities do rally, then we could see Australian dollar also picking up pace again. But for now, look, anything can change. If suddenly the stock market does reverse lower, then I think that the yen could become attractive. That said, with the problem with the yen right now is that we're still not seeing the BOJ intervention, and I think that it's going to be postponed for now. We're not seeing the interest rate hikes yet. So, and again, that's going to be kind of put down. This idea will be put down for now by Sanaya Takaichi, and I think also the U.S. is not in very much in interest to have a stronger kind of Japanese yen. So because again, and they don't want to see the BOJ kind of hiking rates, because that's gonna start forcing maybe some, or not forcing, but maybe some investors, Japanese investors, will be pulling out of the U.S. debt and putting into Japanese debt. Because they're going to be getting a higher yield on the Japanese. So why to go there when you can get here? Anyway, so long story short, for now, like I said, AUD JPY, we're near critical area, highest point of 2024. Let's see if we can push and stay above that by the end of this month. If that's the case, then yes, I'm going further north a little bit at least. Let's jump into Euro USD. I'll try to be very quick here. So we broke below this key area of support near the 1.1776. We also fell below the 50-day EMA here on my daily chart, shown as the green line. So in a way, everything's kind of pointing a little bit more towards the downside, and I'm actually leaning towards that because again, if to believe that maybe DXY could pop a little bit higher here, yes, it could lead Euro USD towards slightly lower areas, maybe towards this 100-day EMA first. I am very ambitious here on my chart, you can see here, but okay, this is maybe a little bit of a more of a medium term view. Let's see if it works out or not, but from the very short term perspective, I'm going to aim for the 1.1713 ish area around here somewhere near the 100-day EMA, shown as the blue line on my daily chart, and then we'll take it from there. Maybe the next target will be the 1.1670, somewhere around here, marked by the low of the 22nd of January. So, but let's go step by step, okay? First, let's try to see if this is going to work out or not. Also going into GBP USD. GBP USD here, yes, pushing further south. In a way, we can say that maybe it's within a falling channel, something like that. So if it is the case, then hey, I think that there is more room for some more downside, given again the fact that there is potential for DXY to pop a little bit to the upside. Let's keep an eye on that one. Let's see what's going to happen here, and then we'll take it from there. Very quickly on USD CAD. Now this is another interesting story here actually with USD CAD. Now with USD CAD, if we look at this picture here, we're seeing that a possible symmetrical triangle forming here, where we're kind of coiling up a little bit. Overall, we're still on a downtrend. Even if DXY does push a little bit maybe to the upside in the short run, I still believe that USD CAD actually could go lower just because of geopolitics, because of oil. If oil continues to push a little bit more to the upside, by the way, you can check out my latest video on WTI oil and Brent that I did today, so you can check it out here. It's available. Just my little kind of thought on what could happen, just like a crazy scenario or something like that. But anyway, so if oil does push a little bit more to the upside in short run, yes, this could play out positively for the Canadian dollar, and we could see USD CAD actually drifting back down. So this triangle here could be working out nicely. Overall, if we look at it from the technical perspective, then yes, we will see that the prevailing trend is to the downside before entering this triangle pattern. Then the greater chance for this one to break out is to the downside. However, we do not try to predict too much. We actually just prefer to wait for the occurrence to happen, and then we'll just gonna go from there. We wait for the clearance of one of the sides of the triangle, but again, within the triangle, I don't, maybe I might be wrong, but I'm kind of leaning a little bit more towards the downside. However, look, let's wait for what's going to happen on the geopolitical side and what's going to happen with the price of oil. USD JPY, very quickly, this one's pushing back up here. Yes, kind of in line with the idea of seeing maybe a little bit of positivity in the DXY. So, but again, I will be very careful here near this downside line, which is taken from the high of the 23rd of January. So if it provides good resistance, then yes, another decline here could be possible. Overall, maybe we could say that it's forming something of a descending triangle if we do just take this as a base here, the 152.10 zone, but maybe it's forming, like I said, a descending triangle, but again, it would need to overcome this upside line first, so preference is the upside line for now, depending on where the rate will be here. So for now, long story short, if you're not comfortable doing anything here, honestly, just don't, because this is something that, like I said, it's a little bit difficult to predict. So for now, just observe the price action, and we can wait for a break through one of the trend lines first before considering the next short-term directional move. USD CHF, we broke the triangle here, and this is one of the good examples when you have to actually wait for the breakout. And there we go. We broke it to the upside, although we can say the same thing. The prevailing trend was to the downside. It's kind of a greater chance for this one to break out lower. But yeah, it made a move higher. So it made a break through the upper side. So that's why I always say wait for the breakout to happen and then you can do something about it. Because again, this is a good example, when you have to just kind of play the patience game a little bit more. And for now, I'm leaning towards slightly higher levels, but yeah, the 0.7818 is going to be my next target. That's the high of actually the current highest point of February. I think this is a good target. Let's see if we can reach that one or not. And that's a wrap, ladies and gentlemen. Yeah, I just wanted to kind of pick up on that. Ladies and gentlemen, thank you very much for watching and listening. I hope you found this useful. This was just a little quick FX update. Hopefully, like I said, it met your expectations. But look, don't forget to like and subscribe. The usual stuff. Follow us for more videos. And yeah, I'm gonna see you next time. I hope you're gonna join me my webinars next time as well. So yes, thank you very much. As always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you later. Bye bye.